Gold and silver have been on record-breaking runs recently, and they're getting all the attention from the news media. But a similar rally among other commodities will likely have a much bigger impact on you personally, whether you're an individual investor or an average consumer. Despite a recent pullback, soft commodities, everything from wheat and corn to sugar and pork, have been steadily advancing for the past few months. This week on Money and Markets, we'll explain why and predict how prices will react in the future.
I'm Sean Broderick. I'll tell you about a threat to the global wheat harvest and reveal 2 ETFs that can help you take advantage of the rally.
Hi, I'm Rudy Martin, here to offer my own stock picks for playing the commodities markets and break down the supply and demand issues driving the rally.
And I'm Tony Sagami with a look at the one factor that may eclipse all the others in the future: Asian demand.
Plus, Jen Amos is back with picks and pans based on information from inside the farming industry. All that and a closing comment from Martin Weiss coming up right now.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. Our first guest this week has been tracking the rally across several soft commodities. Sean Broderick is a natural resources and small cap specialist for Weiss Research and, of course, the editor of the Crisis Profit Hunter newsletter. Sean, it's always so good to see you out here on the set.
Yeah, good to see you too.
Okay, let's start with a very simple question. Why have we seen such a rally in soft commodities lately?
Well, increasing demand, particularly from the emerging markets, and many people weren't planning on the global economy coming back, this well. North America hasn't, but the emerging markets aren't waiting for us. And so a lot of stuff wasn't planted because they really weren't expecting that. We're also seeing speculation in the markets, of course. But one thing also is that we are seeing this just one problem after another in the world's bread baskets. Half of Russia caught on fire with their wheat crop. Argentina and Brazil both having droughts. Pakistan had these floods that were like biblical back there. And so many places that you expect would provide grain and other agricultural products to the world just aren't doing it. So you put these things together and it just seems that the prices are headed much higher.
Okay, give me your outlook for some specific individual commodities.
Well, corn could go up to $6 by year end, I think, or if not, shortly after that. Soybeans, well, we've already seen beans in the teens, beans over $10, now beans over $11. It isn't slowing down, really. I think soybeans could go much higher, especially because of that demand out of China and places like that. Sugar, sugar's just had a great year, and even when there was news out of India that they're supposedly supposed to have a good harvest there, sugar didn't even blink. So that tells me that there's a lot of strength in that market. I'm not as optimistic about things like orange juice and coffee. Orange juice because we already saw a big run-up in prices, partly because of the drought in Brazil, but partly because people were worried about the storm season and worried about what could happen to the orange juice crop there and in Florida and stuff like that. And now we're reaching the end of the storm season, and so we could see, well, not so much froth, but we could just see some of that anticipation pull out of the market. Coffee, well, I've just been burned a few times trying to play it, so, I kind of stay away from that market.
Switch to decaf, right?
Yeah, right, exactly.
All right, one winner that we've seen has been wheat, but there is something out there that I think could have a side effect to the success of wheat, right?
Right, well, we have seen the real production problems in Russia and Canada and stuff like that, but UG99, which is wheat rust that originated in Uganda, that's something that could be a real game changer here, simply because UG99 kills 90 to 100% of the wheat crop, especially the wheat varieties we have in the world now, which were specifically bred to beat wheat rust. Well, what's UG99? Wheat rust that has adapted to kill those. And since there's less varieties of wheat, it's much easier for the wheat rust to actually kill the wheat. Now, wheat rust spreads by spores that are carried by the wind. So it's not like you can do any kind of quarantine or stuff. It's just going to move around. It's already spread through Africa. It got held up by the big desert in the Middle East, but by 2007, it was in Iran, 2 years ahead of schedule. What neighbors are on? We have Afghanistan, we have India, we have Pakistan close by. And so these are places where they have huge and growing populations. They are big wheat producers, and now their wheat crops could really come under threat. This is something that could be a huge thing. Also, I would also point out that we're seeing a La Nina develop, which is a big Pacific weather system. And La Nina tends to take the drier places in the world more dry and the wetter places more wet. This is not good for harvests. In places like Argentina and Brazil, I mean, they're already having problems with drought. They could continue to have problems with drought. Argentina is also one of the world's major producers of soybeans as well. In the U.S., well, the last time we had a thing like this, we saw both our wheat and our soybean crops fall simply because the fields were so wet people couldn't get out there to plant the crops. So we could be looking at that here in the U.S. So we saw like food riots in Mozambique in September. I don't think that's the last of the food riots we'll see.
Okay, for the rally.
Yeah.
How should investors hop on board?
Well, there's really two ways you can play it. One would be the DBA, which is the PowerShares DB Agriculture. It invests in sugar, wheat, corn, and soybeans. That's actually kind of specific, only those four things. Now, those four things have been doing great, and the DBA is really one of the more liquid agricultural ETFs you can play. So it's a very good way to do it. But if you want broader exposure, I would go for the RJA, which is the Elements Rogers International Commodity Agriculture ETN. Huge name, you get out of breath saying it, but we have recommended that, full disclosure, in the Crisis Profit Hunters portfolio. It's doing great, but it's not slowing down, and it gives you exposure to everything from coffee to wheat to sugar to you name it. I mean, just the big agriculture sector is in the RJA. And what used to hold me back from recommending that was it just wasn't as liquid as, like, you know, the DBA. But that's changed recently. We're seeing a lot more liquidity, I think because people are just looking at it and realizing how the global agriculture picture is shaping up. They're looking forward and saying, you know, this could be a real problem this year. We could see a price spike again. So the RJA looks like something you could play now.
Okay, Sean Broderick, thank you, sir.
Thank you.
For a closer look at the dynamics of supply and demand affecting the movements in soft commodities, we want to bring in our next guest. Rudy Martin is an emerging market specialist for Weiss Research. Rudy, it's always so good to see you out here on the set as well.
Thank you.
Okay, what is your take on the fundamentals of this rally that we're seeing, and that's both from the supply and the demand side?
Well, I agree with everything I heard from Sean regarding the drought conditions and the limited supplies. What I really want to bring out is this is a very exciting time to be in this commodity space. China is now become a net importer of things like corn, and that has corn traders, livestock feeders, people that make money off of that commodity, salivating about the potential that China could actually be a very large player in this market going forward. So that has brought a lot of attention to at least that commodity, and we're also seeing a lot of movement in a lot of other areas as well. There are impacts to that. You have a significant amount of crops going out, a limited amount of transportation infrastructure to get all this stuff out. So it's hard to fill that need, and so as a result of that, not just the price of commodities are going up, but the cost of exporting them.
One big winner that we've seen lately has been wheat. Those prices up 40% over the past 3 months. Now, what is that particular trend saying to you?
Again, that reinforces the limited nature of a lot of these commodities in terms of the regional focus, the demand there. But more importantly, it really exposes the fragility of the entire system. When a farmer finds himself attracted to producing wheat because that price has gone up, he's going to produce less corn or less some of the other soybeans. So we're having there's a lot more correlation now between these markets than there was in the past.
Also seen a big rally in corn. What's your outlook for that particular commodity?
Well, I agree with Sean's comment about $6 corn. I'm not going to put a date line on that because there are all kinds of things that could impact that, including the continued drought conditions in Latin America. But if my focus is really how do I make money with that, and if you're interested in doing that as an individual investor, I think the most attractive way to do that is through the corn ETF, ticker symbol CORN, and that is basically a combination of 3 different futures on the Chicago Board of Trade. That's a very easy way to do that through an ETF. And another way that I think that might also be interesting is Monsanto. I know that that ticker symbol is MON if you're not a fan of that already. And the beauty of that company is a huge supplier and provider of agricultural products for not just the Americas sector, but the global sector. And right now it seems to be attractively underpriced relative to some concerns that people have about it that are really not that important.
What about fertilizer companies, Rudy? Obviously they have a major impact on these commodities.
Yeah, best way to make money in the agricultural sector is off the suppliers, I think. And if you look at the price of potash, ticker symbol POT, that stock's jumped dramatically. And it's obviously a large part of that has to do with the BHP Billiton bid for that. But it's also drawn attention to the need for fertilizer for all the crop sector. And another company that I think is very attractive is SQM. It's a Chilean fertilizer company, which is partially owned by Potash. So both SQM and Potash, to me, look like attractive plays here.
Okay, Rudy Martin, thank you, sir.
Thank you.
Both Rudy and Sean are going to be back later in the show for a closer look at other soft commodities, and we'll bring in Tony Sagami to discuss how booming demand from Asia is also affecting prices. But coming up next, Jen Amos will be here with picks and pans based on observations from within the farming industry. If you have a question or a comment on this or any other topic, please email us at weissmoneynetwork@weissinc.com. We may not be able to answer all of your emails or address them on air, but we are keeping them all on hand for future episodes, and we appreciate the feedback. Money and Markets is back in just a moment.